Good morning, good afternoon, good evening, depending on where you guys are at. I hope you've had a good trading day so far. As always, we will get started with SPX this morning. Answer any questions that you guys might have around the market. We'll talk a little bit about what to anticipate on Fed days like we have today, and then we'll go from there. So, starting with SPX here on the intraday charts, we had a slight gap to the downside. Now, part of that might have been weighted because, of course, Microsoft didn't really meet the expectations of the market due to their earnings announcement and had a little bit of a pullback there. Hey, Mirza, good to see you. So we'll see if that lasts through the Fed news. Hey, Lorna, good to see you too. Otherwise, though, you can see that we gapped down, but we went just right into intraday support levels. Those support levels are attempting to hold. And it appears like we're starting to chop. And that kind of leads me into the next point, which is what to anticipate on Fed announcement days like this. So basically, on Fed days, it's not uncommon to get a sign of you basically have your move at the open, whatever that is. And then you start to go into consolidation a little bit earlier than the lunch hour. So normally, hey Omar, good to see you. Sharon, you as well. Um, normally during Lynn, of course. Good to see you too. And absolutely we can take a look at RTX and TDoc. Let me write those down and we'll pull them up here in a second. But basically, usually, right, during a normal trading day, the lunch hour is typically where you can anticipate to find that bit of chop. And let me make sure you guys have view of the charts here over on YouTube or Twitch, depending on where you're at. There you go. So normally you get a bit of consolidation going into the lunch hour, and then you pick up that volatility again once you head into market close. But Fed days are a little different. Now, they don't always act like this, so keep that in mind. It's just more rule of thumb. Doesn't mean it's the same way every time. But typically, on days where the Fed is having an announcement, especially when it's one where Powell is going to be talking, it's not uncommon to identify that kind of choppy, consolidated range that you would normally find in the lunch hour a bit earlier in the market day. And usually it happens right around Europe's close, which is perfect timing for where we're at, right? Because 10:30 is Europe's close that just happened. And so don't be too surprised if we start to just trade within the first two hourly bars range, right? The high of this range. Well, we can get the exact high and low for the day. Let's go to the daily chart actually. So on the daily chart, the high for today is 45.65.10. The low for the day is 45.52.73. So it's not even a 13-point range that we've seen today. Hey, Tom, good to see ya. And Christian, absolutely, we'll add Uber to the list. We'll take a look at that in a second. And so we might get a little bit more of a higher, lower, low, depending on how this acts. But for the most part, I wouldn't be too surprised if it chopped. And I see AMD. We'll add that to the list too there, Tom. And so be mindful of that. A few other things you can anticipate. One, the option premiums, especially if it's today's expiration for SPX or any same day expiration on the indexes. Do not be surprised if the theta decay that you typically look for, if you're a person that likes to do iron condors or credit spreads or iron flies at the start of the day, and you usually are out before going into the close of market to work off that theta decay, don't be too surprised if you don't see that today, or it's not as dramatic of a theta decay as what we normally get. Once again, the reason why for that is due to that Fed announcement. So very much like earnings going into the Fed, it's not uncommon to start to see the option premium either hold their value or to actually increase in value. And the reason why is due to the uncertainty around that announcement, right? Sometimes we can get a strong move and pop and volatility to the upside after the news and the conference happens. Sometimes you can get a stronger move lower. Certainly, that was the case quite a bit last year. It was a lot of fun actually doing trades around the Fed last year due to how much volatility there was. But that's part of the reason why sometimes that option premium on same day expirations for the indexes can hold on a little bit more strongly than what they do on an average market day, right? Where there's not this big news event that's quote unquote coming out. So that's another thing to be mindful of. Now, once the Fed announcement happens, and usually also once Powell starts talking in the conference, then that crush in premium, that crush in theta decay usually occurs because now the market knows right what the news is and it can react accordingly. And all that premium that would have maintained itself on those out of the money strikes that remain out of the money, it's wiped out, right? It usually goes rather quickly. The second thing to note is typically during a Fed announcement is once the news hits on whatever action they're taking, there's usually some sort of spike. And it often happens in both directions where you'll have an initial, like, for example, a spike to the upside and then a spike to the downside. And then it gets into another range where it stalls. And it doesn't stall for very long because 30 minutes after that news comes out, keeps in mind, that's when Powell usually gets on the mic to talk. And when he talks, that is the second example of when there is a volatile move again. And once again, not uncommon for it to happen in both directions. But usually, once he starts, going, once he starts to answer questions, the market usually chooses a direction and trends that way into the close. Now, every now and then, especially in a more characteristic of a bullish market environment, it's not uncommon actually for the day to kind of end where it started, meaning it has that volatility midday around the news, but then the market's like, okay, that's kind of what we anticipated. And it goes back to kind of flatlining into the close. And so trades like iron flies can be a great way to take on that crush of premium. But other times it's not uncommon for it to choose a direction, right? Either a bullish or bearish direction. And then it starts to trend that way going into the close. So I'm personally going to be keeping an eye out for a SPX end of day butterfly. We'll see if we get a chance to put that on if we do end up with a trend move up or down. But otherwise, that's usually the characteristic of what happens on a Fed day like today. So please keep that in mind if you're trying to do intraday trades prior to the announcement. Understand one, you might be paying a bit more on the premium side of things for the cost. And two, be very mindful of your levels, right? If you see us stalling any sort of range, don't be surprised about that. It could be that we're in chop and it could reverse back down in the opposite direction and kind of just hang out. And certainly, of course, if you have anything that same day expiration that you plan to hold through the announcement, please treat it like a lotto trade, like an earnings trade, right? Where you're okay losing 100% of the capital cost if it does not maintain within the range that you're looking for. Or if it does the opposite move of what you're anticipating, you got to be okay accepting a loss if the Fed doesn't react the same way that you're anticipating. So I'll be very curious to see what happens with the Fed. The reason why I think this one could move, of course, is because they've been hinting recently about potential rate hikes a bit more rather than cuts or rather than stalling. I know earlier in the year, the Fed futures have priced in potential cuts later in the year. And then Powell, it feels like the last two announcements has kind of like nixed that. Like, no, guys, I don't know why you're pricing in cuts. We're not planning to cut kind of thing. We might actually go back to hiking. And so we'll see what he says today and if that gives any sort of clarity to the market on what action it might get. Any sort of news that the market views as positive should, of course, lead to a bounce and a continuation in the bullish trend that we've been in. But any sort of negativity or surprise, right? It doesn't even necessarily have to be negative, unless it's a really good surprise, I guess. But unless, a surprise in general and unexpected, right? An unknown can also cause that fear and in turn cause it to sell off. So we'll see what happens here. In regards to a technical point of view, overall on the daily chart, we're still very much in a bullish trend, right? Our simple moving averages are stacked up. Bollinger Bands are still pointed higher. We're still doing a good job of even just maintaining the 10 period simple as support. The things that are a little cautious about this morning, though, is one, our bullish signal is starting to get a red box. Now, technically, if it's just the one red box that prints on the compound breakout tool, it's still a valid bullish signal given the current trend. But if we get two or all three lines to start printing a red box, or if tomorrow, let's say our signal starts to go back to back, right, with green, red, or something like that, then it starts to turn into more of either a pullback or a consolidating signal. So, things to certainly be mindful of. Another thing to be a bit cautious about is momentum. Now, momentum, the last two times it's had a slight pullback, we saw the underlying price basically pull down towards, or in this case, slightly below the 10, but ultimately it still held those ranges as support. Momentum built up, and that gave us another leg to the upside, if you will. So it could be a similar situation to that where we've stalled a bit so we can allow the technicals to catch up with the price. Powell says something that the market wants to hear. We start to get green bars going again, either today or tomorrow. And that, of course, could cause for a roll up move and a continuation higher. But if it does disappoint and we start to break below the 10 period simple, one, momentum then could be in the process of resetting. And when momentum resets, we know that the two probabilities of it resetting off exhaustion are either chop and consolidation or a continuation of the underlying price lower. And if we do move lower, my next target to the downside off the daily chart would be right around 44.64, 44.50-ish range. That would be right into the ATR trailing stop and the 30 period simple as support. And then we'll see how those levels hold. If they do, that might actually make a really good buy opportunity, because not only are you at a technical support level, but if you notice back here, right in that range, that actually used to be a price resistance level. So it basically mean that the price is coming back down to test that level that used to be resistance and now tested as support. And so if that, along with the technical support levels hold, could be a buying opportunity to jump back into something. Um, and then Sharon, so the Awesome Oscillator is actually a free indicator, and that is available to you. As far as the compound breakout tool, you could certainly call in to customer support and see about that. I know it's not technically a part of necessarily the mentorship and the class, but there are a few deals out there. So if you call in, you might be able to talk to them if that's something that you're interested in getting. In general, though, of course, I incorporate that indicator along with all the other ones on my chart into the analysis for every trade I jump into, certainly. And then, yeah, Barney, I've been watching the double broken wing butterfly. So I would personally like to get out of that prior to the Fed announcement. We'll see if we actually get a chance or not. I'm watching it right here on the intraday charts, as you can see. So for those of you following along with this Microsoft earnings trade, one, very similar, right? Once again, you got to be okay technically with 100% loss on this if we don't close out prior to Fed and, Fed rips us to the upside and takes Microsoft with it. But what I've been watching are the intraday charts here. So far, we're doing a good job of holding overall intraday resistance. Currently, we're getting a little bit of a pullback in momentum. But as you can see, that hourly chart, the squeeze has fired to the downside. Bollinger Bands are flaring open. Momentum still has room to move lower. It crossed below the zero line. We have a bearish signal on the compound breakout tool. So there's still a lot of overall bearish weight on this currently. It did get to where it was in the money on the lows of the day, but it wasn't quite giving me the profit target that I was looking for, which is why I didn't close it out. Right now, with the bounce back up, we're sitting right around break even. So if you want to close out the put side here and call it a scratch, you certainly can. But I'll give it a bit more time because I'm okay with the risk on this. See if we can't hold the 5-minute resistance, and if we can get another rollover and we test the lows, but it looks like it's stalling, I might take the smaller win and protect capital prior to the Fed news. Certainly, if the Fed says something that disappoints the market, then I think this trade could really work out, right? It would drag Microsoft probably down with it further. But that's a little bit more speculative at this point. Really quickly, let's pull up Microsoft on the daily chart. So one thing to watch for on the daily chart is how we hold up. So we went down, we basically opened at the 30. It tried to hold the 30 period simple, wasn't quite able to do so. So we're breaking down below it. The next bigger support level, yeah, and you can ignore these alerts. These are alerts just to keep me to let me know which way we're headed if I'm away from my computer, which I'm not right now, obviously. But if we do continue lower, if we close below the 30, don't make a bullish divergent bar, the next support level to test is actually down here around 330 to 327. That's right by our short strike for the put butterfly that we hold. And I wouldn't necessarily anticipate a break of that level. Notice Bollinger Bands are still very flat in that range. Momentum still pulling back. So that's still more a sign that we could either consolidate at this point, right? It's resetting towards that zero line. The bullish signal that we printed yesterday immediately canceled out. Now, if this one continues to print the red dots following it, it will be a bit stronger of a pullback signal. But right now, notice how it's like back to back prints that even if they're valid, meaning two or all three of the lines are in agreement, if they still print back to back like that, it's still a sign of chop. So I don't know if I'd play it, a lot lower than this, right? But the low end of this choppy range that we're currently in is right by our short strike. So if we can go and test that, if the Fed drags us down that way, then certainly we should be able to close out of this for a nice profit. So that's what I'm looking at. As far as AI goes, I am watching that one too. It was up a little bit this morning. It's pulled back again. It's in a very narrow squeeze. So it's in a way becoming a little bit more like a lotto. The reason why I still like this trade is because of the recent true lows. We're doing a good job of maintaining the moving averages and trying hold them as support. We have momentum hugging the zero line, but still above it with positive bars, which means there's still more of a bullish sentiment than bearish at the moment. If the bars start to cross below this red horizontal line and they turn negative, then we have to be careful of that bearish bias. The compound breakout tool, the pullback signals canceled out, still hasn't given us a bullish one. I would like to see that print, but currently it's a consolidating signal. And then, of course, the Bollinger Bands are getting pretty narrow. So if we could get the squeeze to fire, right, and give it room for us to move to the upside, it's really not going to take much for our spread to go back in the money. The question is, though, can we get it to move in time for expiration this week? And I'm not sure about that. So depending on how it looks into the close today, I might go ahead and close it out for the small loss, protect capital on it, move on. May or may not do that before the Fed news. I haven't decided yet. But if it does continue to hold support, I might consider jumping back into something, giving myself a little bit more time, and then still trying to play this squeeze to fire to the upside. Because overall, I like how it's holding up here. It's just unfortunately for us, it didn't give us enough of a profit off of this tag to the upside to where I wanted to close it personally. And then it's pulled back and continued the chop. So we couldn't quite get the bullish run going sooner than anticipated. But to me, it does look like it is getting ready to get the squeeze to fire. The more that the Bollinger Bands compress together like that, the more they basically get closer to touching one another. Usually, if that happens, there's a squeeze involved. And when that squeeze starts to fire, it's going to force those Bollinger Bands open. And it's not common, I'll say, for it to get that narrow. Now, there are certainly individual symbols that I've seen it get that narrow and then they just flatline, but I wouldn't necessarily anticipate that on AI. It's known to consolidate. But given the current ranges and the movements that we've had, this is starting to get a bit tighter. So unless it's going to flatline again on us, which I wouldn't anticipate currently, I would look for the squeeze to start to set itself up, and we'll see if that happens. And yes, I haven't done Tesla yet, so I'll just go over all the trades that you guys might be in. Of course, AI and Tesla are a part of the $500 challenge. So on Tesla here, yesterday, at least when I was reviewing this into the close, it was doing a good job of holding the 30. Now, currently looking at it, it looks like it dropped just a little bit into probably the last few minutes of market to where it closed below the 30. We did get the follow through on the bullish divergent bar with a higher high, but didn't quite get up to the target once again, and it pulled back on us, and it's kind of in consolidation. The good news is the recent true low, similar situation to AI, momentum still positive. It's just still resetting. We have the choppy signal in the compound breakout tool, so that's more a sign of consolidation. And the Bollinger Bands, of course, are still coming up to meet the price. So even though we're on the lower end of the range here, the Bollinger Bands, at least as of right now, are not anticipating a move lower. And so earlier this morning, when we were trading at the high, we were actually making a bullish divergent bar. I'll probably wait to see how this goes into the close. If it can form a bullish divergent bar one, that gives us the possibility of it following through once again with the higher high. If we can go up and at the very least test the 10 period simple or the recent highs that we had back here, that's all we need on Tesla for our trade to go back in the money and be profitable. So we don't need much of a move. We just need a little bit of a stair step up. Um, on the caution side, though, even if it does print a bullish divergent bar, we do still have back-to-back divergent bars, which can be a sign of consolidation. Meaning, if we get the bullish divergent bar, it follows through with a higher high like it did here, but it looks like it's stalling. I'll probably cut the trade at that point and take the quick win, or protect capital depending on what the value of the butterfly is. However, right, like I mentioned, we're not necessarily getting any bearish signals yet. So it's not something I want to immediately cut here. Certainly, if you don't think it's going to go up, like Marin mentions, he doesn't think Tesla will go up, then please feel free to protect capital, especially prior to the Fed news. Because once again, like we talked about at the start of the session, premium gets held on to a little bit more strongly going into the announcement. And then after the announcement, the normal theta decay and stuff kicks back in. So if you want to protect your capital going into the news, I will never blame you for that, right? You always have to do what you think is best for your account, and you should always be mindful of risk. So if you have more contracts than I do, or if you're a bit more concerned about it, don't hesitate to do that. But for myself, this one, I probably don't mind holding into the Fed announcement, and then we'll see, which way the Fed reacts. We'll see if Tesla reacts with it or not, and then I'll make a decision on it going into the close last hour of market today. But so far, it's doing a good job of holding up. It's just very much like AI. It's kind of showing us more consolidating signals rather than the strong bullish signal, which doesn't mean the bounce up can't work, but I might have made it a little bit too shorter dated for the challenge account going with this week. So we'll see how that works. And then let me go on to some of the other symbols that you guys asked about here. So on this one, X was up next. Let me pull that up. And Don, I did already review the Microsoft trade. In short, I would like to get out of it prior to the Fed news. It's doing a good job of holding the intraday chart pattern right now. So as long as it doesn't break intraday resistance levels, I'm going to look to see if it doesn't get another rollover. Otherwise, though, I have not taken any action on it. And as soon as I do, I will, of course, alert it out to you guys. And of course. HC. So for the challenge account, I usually don't roll the trade, and look at it in that viewpoint, right? The July challenge will end at the end of the month, which is this week. So that's part of the reason why for the Tesla trade I did this week's expiration, because I usually for the challenge account try and keep every trade within that month's time frame. But would I re-engage in Tesla? Yeah, I might consider doing so. It's really going to depend on how the market reacts to the Fed news. And Joe, AMD's on the list. We should definitely be able to get to it. Not a problem. But let's start at the top of the list and we'll work our way down. So the first one that you guys asked about was RTX. Now, RTX had earnings. Would have liked to see a bit more of a dramatic move like this on Microsoft, then we'd already be out of it, right? But beautiful volatility and gap move to the downside, went down, popped up, made a bullish divergent bar. However, normally a bullish divergent bar would signal a higher high within the next 3 bars. And that's not to say it can't happen. But the reason you would have been very cautious, I should say, about playing a reversal move back to the upside is for a few different reasons. One, the squeeze has started to fire lower, right? So that energy is built up to the downside. Two, your momentum bars are definitely building down off of the zero line with actually even today a little bit more room until it reaches bearish exhaustion levels. So that already adds bearish weight to this setup. Three, you've been attempting and failing to break above the 100. And I think we actually talked about this on RTX prior to earnings, where you need to be very mindful of a symbol that's been trending below the 100 in a bearish trend specifically, and then it goes back to retest it, because on the retest of the 100 period simple on a bounce back up, sometimes it's short lived. It doesn't last. And what I mean by that is usually if you want that chart to go back into a bullish trend, you want to see some strong energy and confirmation that you're really trying to build up. And it did show that a little bit here, but then obviously it didn't last very long. And once it starts to break support, right, that's your caution of, oh, that might have been a fake out move. Back here going into earnings, we didn't even really get that run up. It just kept stalling at the 100 period. So every time it attempted to break it, it would give it back up pretty quickly. And so that was already a clue that unless the earnings announcement did stellar and allowed that to be the catalyst to break and start trending higher, there's a good chance that this could have started to roll over. Another clue, we had a bearish divergent bar going into the announcement that was valid. And of course, our moving averages were already attempting to roll down off the 30, and they certainly are now. So that's taking us back into a bearish trend. And then the last thing is the third deviation Bollinger Band snap. When the underlying price moves outside the third deviation Bollinger Band, which is this outside blue line on my chart, basically that causes, in my view at least, it kind of causes a case of FOMO in traders, where anyone who is long the RTX going into earnings and this happens, they are scrambling to jump out, right? They're like, my God, I need to protect my capital and my risk. On the flip side, anyone who is debating about getting bearish and didn't get bearish and sees this move, it kind of to them is like, oh my gosh, I have a case of FOMO. I want to jump into it. I need to, get going. And so it kind of keeps the price weighted down. So what happens is when you make a third deviation Bollinger Band snap like this, there's usually one of two outcomes. The first one is you consolidate within that bar's range. And that's what we're doing here, right? We're not really getting a strong bounce up. We're just hanging out within this bar's range and allowing the technicals to catch up with the price. The second possibility is it actually continues in that direction of the move, right? Which in this case is to the downside. And so there is that possibility it actually continues lower. Now, the bullish divergent bar, of course, always still gives it the possibility of a higher high. So we still might see it get a little bit higher within the next few days. But the fact that today isn't getting a strong stair step up, that it's staying in the bar's range, that's what I'd be looking for through the next few days. I don't know if I'd look for a strong reversal. Maybe it's waiting on the Fed news once again, and maybe that will be a catalyst to try and get a reversal back up. But at this time, especially if we take out the Fed news, what I'd be anticipating is probably a bit more chop in this range. The chop would allow the Bollinger Bands and moving averages to catch up with the price. And then if the price consolidates, for example, into that 10 period simple and that holds resistance, that actually might be a place to then jump back and short again on this. So no action that I want to take personally. The move has definitely already happened, right? Me jumping in here, no matter what, would probably be a case of FOMO, either up or down. I'm not willing to put my capital risk out there for that. But very strong move to the downside. So if you are in something that's bearish, you might hold a runner out there, but there's no harm taking the profits here either. And if you're trying to anticipate for a reversal trade, I would say be very mindful of that. Maybe wait for momentum to prove it's at exhaustion or to give you a green bar. And certainly if you really felt the need to jump into something, please consider maybe doing just a small portion of your normal capital risk. If your normal capital risk, let's say, is $500, maybe you're only doing 100 or 200 on a reversal trade. That way, if it doesn't reverse and it just stalls, you're managing a very small capital risk for your account and what is, well within your normal risk tolerance. If it does bounce, then great, you have some money in the game. And then, of course, if it continues lower ultimately, then, like I said, you're managing a smaller amount of risk overall. TDOC is up next, so let's pull that one up. So TDOC here's what you wanted to see on RTX, right? So similar situation actually going into the announcement. And this is a great example of why you should always treat earnings like a lotto trade because you have, or, unless you have the inside scoop, right? Unless you're friends with Teladoc CEO or, the finance guy or something to where you have the inside numbers, even then, you still aren't quite sure how the market is going to emotionally react. For example, some of these tech earnings that have come out, they actually haven't done bad compared to the estimates, but the market reaction has been negative, right? And that's what we're looking for as traders. We're not looking to see if the numbers actually match or not, right? I personally could not care less about that. I mean, obviously, if it had shares and it was longer term hold, yeah, I might be concerned because I'm, a shareholder of the company. But from an options point of view, I do not care which way that earnings beats or misses or whatever. What I care about is is the emotional reaction of the market to that news event. And so I couldn't tell you if Teladoc made its estimates. I can't tell you if they upgraded their, analysis for the future for the rest of the year and, they've upgraded it. I have no idea what happened here. But what I do know is that the market liked what it heard and reacted positively to it. And so this is kind of what you wanted to see on RTX, and instead the opposite occurred, right? You had a bit more of that bearish trend. You had a squeeze coming up. You did have some true lows, of course, at the bottom of this range. But even going into the announcement, there's that bearish divergent bar. Bollinger Bands were starting to weaken to the downside. You know, Obviously, if earnings wasn't around, you would normally be looking at this for a trend move lower. But what happened? Earnings had a positive reaction and then it bumped up the price. And it's such a nice bounce here that it's given us the catalyst of breaking above the 100, of breaking the remainder of our resistance levels on the daily chart, right? Our moving averages, the ATR trailing stop. And it's continued with that strength to the upside. And it looks like it's actually making a third deviation snap to the upside. So as long as sellers don't drive this back down into the close, there's a good probability that the price for the next few bars will either stay within this bars range, which obviously it's a pretty wide range, so that wouldn't be too hard to do, or it will actually continue trading to the upside. And given the room on momentum, given that the low compression squeeze is currently still valid, I would certainly take into consideration that possibility of it continuing higher. The one thing I'll point out about this chart that I'm not necessarily a fan of for the bullish sentiment is the fact that we are basically right around price resistance, especially if the price does end up selling off and closes at or below 28. I'd be a little mindful of that because you can see back here going into this prior earnings announcement, that's basically right around the range where the price started to stall and then ultimately pulled back. So that price resistance, price support, you always want to be mindful of. Sometimes they beat all the other technicals when they're in agreement. And so, for myself, unless I was already in some sort of bullish trade, once again, it's not really the place I want to buy in. Doesn't mean you can't, but similar to RTX, consider a smaller portion of your capital risk. That way, if it just stalls or if it does get a pullback, you're managing a much smaller amount of money. And then if it can continue higher, great. You have some capital in the game to be able to play it. And like I said, with the squeeze and with where momentum is, it looks pretty good for right now to be able to try and do that. It's just for me, it's one of my trading rules. I cannot buy in at price resistance like this. It's hurt me too many times doing that, especially this year, where chop has been a little bit more of the name of the game, at least in the first part of this year. So that's the only thing that I'd be mindful of. Of course, Lynn. Let's go on to Uber now. So Uber has earnings coming up on August 1st. So once again, similar to the trade that we did take on Microsoft or the trade setups that I talked about on Tesla and Netflix, you could certainly look to try and play the more volatile move off of Uber when we get closer to the announcement. You can see last earnings it definitely gapped up. Here we gapped to the upside, did have a bit of a pullback, but did initially start with that volatile move. Here you had a gap up and then it also pulled back. And then here it gapped up. There's a great example of that third deviation Bollinger Band snap. And then notice how the next few bars continued higher until the Bollinger Bands were finally able to catch up with the price. And then it consolidated into that support. We had exhaustion levels, we broke supports, and then we got that bigger pullback. But prior to that, right, we actually continued higher a bit off that third deviation Bollinger Band snap move. So that's what I'd be looking at with Uber now. I know there's a specific question around Uber, so let me scroll back up and take a look. Okay, so Christian mentions they took the Uber trade from last week, modified it into an iron into a condor call. So you're long the 45, shorted the 48 and 49, and then longed the 52. Net debit was 93 cents, now trading at $2. And I will likely exit today. Well done, Christian. Way to continue to play that move. I know I took that off for the smaller win there, but excellent job. Glad that worked out for you. Certainly, I don't know what your expiration was on that, but I would definitely take the win prior to earnings, right? Don't let that disappear on you if your expiration's after the announcement, but well done. And then AMD, let me pull that up. So AMD here, more chop going into its announcement, and that's not too surprising. At least the symbols that I've been keeping track of, it feels like a lot more of them have been consolidating into their earnings announcement rather than getting the nice run to the upside. Or they started the run, but it started a little bit earlier and then they reached exhaustion levels, and the exhaustion levels kind of had them stalling out going into the news. And so here on this chart, right, the 10 is in between the 30 and the 100. We have Bollinger Bands that are relatively flat. Momentum still below the zero line, so that adds a bit of bearish weight. Our pullback signal did end up canceling out yesterday, so that's a better sign for bulls. But it's not a bullish signal yet, so it's still more consolidating signal currently on the compound breakout tool. We have a squeeze building up. We do have a recent true low. So last time we had a true low going through the earnings announcement, we ultimately did get that trend move higher. So maybe something similar can happen. Keep in mind, though, off the initial earnings news, we gapped down, then held under it, and then that made the buy-in opportunity to try and play to the upside. So given how close our 100-period simple is, might see a similar situation happen. If it does gap down, watch to see how the support level holds, and if it can, that might create the buying opportunity to play back up. Otherwise, though, if you're trying to have me look for a trade going into the announcement, there's nothing I'd really take here unless you put on a trade earlier in the week to play for the consolidation, right, that we're currently seeing. I don't know if there's enough premium on this to trade it basically into Friday and set up a good risk versus reward. And at the same time, I don't know if you necessarily want to put that on prior to the Fed announcement today. Wouldn't necessarily anticipate it being a big driver of AMD, but if the market really wants to pick a direction and get going in it, it can of course affect everything else. And so would be a little bit mindful of it. Otherwise, though, other than the slight bearish weight on momentum, everything else about this chart is consolidation, even the flat Bollinger Band. So I would be looking for it to just kind of chop a bit more into that news at this point. And then, of course, if you were looking for an earnings trade, I wouldn't put it on today. I'd put it on prior to the announcement. So on August 1st, before that market announcement happens. And let's see, here we gapped down initially and then bounced back up. Here we gapped up and then tried to continue higher the next few days. Here was a non-event, so that's where an iron fly really would have been your best friend through that earnings announcement. And then here, a little bit of a gap down, and then it bounced up. So, you might play the volatile move off this one. I don't think it's as consistent as what we've seen on other symbols and setups. So AMD might be one where I just, skip doing a lot of earnings trade on it and wait until after earnings for that clarity before maybe taking an entry. Um, but that's what I'm currently seeing right now in that. And then Nancy, I see you mentioned Boeing. Let's pull that one up. So Boeing here, excellent follow through. So here, unlike what we were talking about with RTX, this one did a good job of holding the 100 as support into the announcement. We actually had 2 valid bullish divergent bars prior to the news. That got an excellent follow through with the higher high today. Momentum starting to cross above the zero line, so that adds to the bullish strength. We have a bullish trend signal. We have a squeeze. We had recent true lows prior to the announcement. Both of those certainly would have been good entries compared to where the price is at currently. Similar situation with the third deviation Bollinger Band snap. It's holding up well. Technically, the trend is bullish now. The 10 and 30 are still pretty converged, but the 10 is still above the 30 and both are above the 100. So that still leans towards the bullish sentiment. So everything's for the most part in agreement. Once again, with the third deviation Bollinger Band snap, if you're in this trade, as long as sellers don't drive it back down into the close, there's a good probability we'll either stay within this trading range for the next few bars or we'll actually continue to stair step up. And given that there's room on momentum, that the squeeze is still valid, you might look for that stair step move higher. Let's just, though, go to the weekly chart real quick and make sure we're not running into a resistance level. And we're not actually, yeah. And that's what I was concerned about. That's why I wanted to look at it. But so far, we're actually doing a good job. And what I mean by that is if you look for the year, right, for the majority of the year, 220 was price resistance. We struggled to break above that. I actually did a trade earlier on in the year, and 220 was that level that was kind of giving me a hard time on Boeing. And so since then, it's kind of been just on my watch and view it list. But earnings, once again, allowed for that catalyst to try and break above 220. So as long as this doesn't sell back off into the end of the week and then close basically at or below 220, this looks good that it's trying to get going to the upside. Notice we have a green bar on momentum with room to move higher. We have a bullish signal in the compound breakout tool. So if we can get that to last longer than the print, unlike here, right, that's a good sign the trend moves trying to go higher. We have the squeeze and all the energy built into that. That could start to fire to the upside as well. And so I don't think Boeing looks bad. It's just, once again, it's nowhere near the usual entry that I would want to look at a bullish trade idea. Doesn't mean it can't keep going, especially with the squeeze of momentum, but be mindful of your risk. Give yourself some time to maybe sit through some chop, right? Or a slight pullback. Be okay with the capital risk that you have out there. Do a smaller capital risk than you normally would. And then if it can hold up, there is that possibility with how much room is left on momentum and these squeezes that they could start to fire to the upside and continue in that bullish trend. So I don't think Boeing looks bad, especially if it can hold above 220. That I would say is a pretty good sign. But if you had multiple contracts on for a bullish trade and played it higher through the announcement, don't hesitate to take most of those off for a win. And then, of course, you can leave one of them on as a runner to try and keep playing to the upside, especially if the profits that you take off on your other contracts cover the risk on your remaining one that's open. And then, yeah, Nihan and VO and Nancy, not a problem. Always happy to go through charts with y'all. So for MVO, strong bullish trend move. It actually started towards the end of last year and then just kept going. More recently, though, we of course reached those exhaustion levels that started to pull back. As it pulled back, the underlying price basically chopped. But then once the momentum bar started to cross below the zero line, that's when we got a little bit more of a directional move back down into the 100 period simple. We actually crossed below the 100-period simple here for a second, attempted to bounce back up, stalled. Now we're at support. So I'd argue this is still pretty choppy. You do see some pullback and weakness here starting to show up on the lower indicators. We are attempting a bullish divergent bar right now. So if that can print on top of the one that we had the prior day remaining valid, we might get a bounce back up into either of these ranges. But the big hurdle right now is basically where the high of the day is, which is right at those resistance levels, right? It's right at the 30 and the 100-period simple moving average as resistance. So if we can't really manage to break and hold above that, that's a clue to be a little bit more cautious about the possibility of it rolling over. Let's make sure we're not at weekly exhaustion. Oh, we were. Right, so notice here, weekly exhaustion, that started to reset. We actually had a recent weekly true low. Let's see how this has worked in the past. So here we had a true low. That was basically the low of the move. Great entry to take the bullish trend. Here we had a true low. You had a short-term trend to move up, but otherwise you would have had to sit through quite a bit of chop until the real trend move started to go. Same thing here, short-term move, had to follow through up into the top of resistance of that consolidated range. But the bigger trend move you would have had to hold out for. And then same thing off this true low. You had the trend move higher ultimately, but then bigger picture trend move, you would have wanted to hold on a bit longer. So what does that mean about the current signal that just printed? Well, seeing how this was basically for a good chunk of last year, and knowing that all our lower indicators are more in the process of resetting, they're more in the process of consolidating, and we're just now starting to print a low compression squeeze, I'd be very mindful that this just starts to chop, right? Bollinger Bands are in consolidation. The 10-period simple starting to flatten out. We're not really getting a strong bounce off the 30 to really continue the trend higher. It's very much in chop and in consolidation. So it might end up staying that way going into its earnings announcement, which is anticipated to be August 10th. I don't know if that's set in the books yet. Usually if it is, it has, the earnings call with it. So I don't know if that's going to be the exact day, but that's what it looks like it's doing, is it's basically taking a breather into earnings, and then earnings might be the catalyst for a continuation higher, or if we're actually going to drop down and get a bit stronger reversal on those longer time frames. And Paul, yeah, we should have time to look at Apple. Let me add it to the list here and we'll pull it up. Of course, Nihan, not a problem. So on Apple, Apple's actually doing a pretty good job of holding up today. Even with Microsoft and NDX kind of, at least last I checked, being a little bit more weighted to the downside, Apple has done an excellent job of holding the 10-period simple. It's bouncing up. There is, though, a lot of price resistance around 195. Notice how the Bollinger Bands are still relatively flat. Notice when we zoom in here, outside of basically this wick, which if y'all recall, if you were trading Apple like I was, then basically there was news that came out midday. Actually, it was during our session here, right? If you recall, you could go back and watch the recording. It was during this session that we took the quick win on an Apple trade that I held. But basically, some news came out that said Apple's considering going into AI. And prior to that, I think they had kind of like skipped over that jump. And of course, in today's current market environment, anytime any company mentions, hey, we're going into AI, at least in the short term, it seems to cause some bullish sentiment to the upside. That's what the market likes to hear. And so you got this blip higher off the intraday move, but then notice what happened into the close, right? The close, the price, people basically took profits off that blip, and the price got driven back down to hold the 95 price level. So that 95 level is definitely a place to be mindful about. We're getting very close to it now. So if you bought the mini dip here for a short-term trade to play up into 95, I would say don't hesitate to take the profits. Now, maybe if the Fed news is really positive today, if the market reacts positively, then maybe Apple can start to break above 95 and get going into a run up into earnings. But otherwise, similar situation to a lot of symbols that we've seen, where We didn't quite get up to the top of the axis for exhaustion, but clearly if you take out the prior peak of earlier this year and zoom in, this has basically been an exhaustion level for Apple. It's not the top of the axis, but you can see how every time it's recently gotten to this range, that's where it's at least paused a bit, allowed for a little bit of a pullback entry on the price. And so we're kind of resetting down off of that. That means we could just consolidate going into earnings, build up energy into the squeeze. And then once again, earnings very much like it was for Google, like it was for Netflix, right? Microsoft. Earnings could be the catalyst on, do we actually break higher and continue to the upside, or do we stall here and roll back down? And so Sharon's asking, the $200 calls is probably not going to happen. I wouldn't say it's not going to happen, right? Technically, if it's the monthly calls, and you hold it through earnings, and earnings the market has a positive reaction to, then they could work out beautifully, right? 200 would be the next big target I would certainly play into to the upside. But will it get there prior to earnings? That's a bit more up in the air. I think we'll have a little bit better clarity on it into the close today or at latest tomorrow. Because one thing I didn't mention earlier off the Fed news, but what can sometimes happen is you get the initial reaction off the Fed news today, right? That blip of volatility, a trend picking direction to the close. But then overnight, what typically happens is the market is, the big players, whoever else does this, they're able to analyze all the little words and nuances that Powell says, because they, of course, really like to nitpick at the words and see exactly what they can try and decipher and decode out of his statements, out of him answering the questions. And so the way I look at it, it's kind of like you're eating, I don't know, some Tex-Mex, right? Some some cheap Tex-Mex maybe, where it's really good when you eat it, but then of course it digests overnight, and then it might cause a bit of an upset stomach the next day. And so that's kind of what happens with the market, where it takes the initial reaction of the news, then overnight it digests it, and then Thursday arguably is the real reaction to the announcement. And sometimes that reaction stays with the trend move that was happening into the close. So if, for example, the market reacts positively to the Fed today, we trend higher into the close, then tomorrow that could carry through into the next day. And if that happens, that could be the catalyst needed to get us above 95 and continue higher. Or, right, the reaction is flipped. Let's say we're positive into the end of the day, but after everyone like nitpicks at the words, they're like, oh my gosh, this actually isn't that great of a comment or a statement. And then tomorrow it reverses. Well, then I'd be more inclined to think 195 is trying to hold into earnings and we chop. But currently the issue right now, Sharon, at least from what I see, is we're in a wedge pattern, right? Not 200, 195 is basically acting as a price resistance, but the 10 period simple's maintaining support. And so literally, if you look at the highs and lows of today, right, the low tested the 10, it held, but now we're at the highs and we're stalling at 195. So the question is, which way can we break from here? The trend would automatically look at me playing it to the upside, but we've seen this year how price resistance has won over everything else. And so that along with the weakness down here would still make me a little bit cautious of it. Yeah, and Sharon, that's sometimes a good way to go about it. So, for example, I wouldn't do this on Apple currently because of that wedge pattern I mentioned. But let's say you had the pullback that I entered back here to play, or off this one, or maybe you played it a little bit earlier here. You could still do the directional call, and then when it hits that first level, you scalp it for the quick win. But you might also consider doing something like a put credit spread, because a put credit spread, you don't necessarily need a strong directional move in your favor. As long as that short strike remains out of the money, you can still profit from the trade idea. So things like credit spreads are really great when you're either at a level where you're really not anticipating it to break it, for it to hold, and then maybe continue the trend move higher, or if you're concerned that we're going to stall, right? Because as long as it stays chopping and your short strike remains, let's say, at 190, you're going to walk away with a profit. Whereas that directional call, you need the move, right? You need that directional move to start happening in your favor, especially if it's a short dated expiration, right? You need it to happen a little bit more quickly. Otherwise, where the theta decay benefits on a credit spread, it hurts you on the long call. So there's nothing wrong with playing calls and puts. I love doing that. But absolutely, if you don't already have some other strategies, like different types of spreads in your toolbox, certainly consider adding them to your list of strategies to use, because they're a really great way to keep your risks small, but still allow for some excellent profit potentials and be able to play different variables of the market, like consolidation or not as big of a trend move, right? Or, looking like, for example, another way you could have played this is set up a butterfly where the pin is at 195 and then you just play back up into that level. It stalls, you're right at your pin. Great way to lock in some profits. Yeah. And absolutely. I teach all of those things in the small account mentorship. And certainly, guys, I know I've posted this in here before, but I know there's always new people coming in, so I never mind posting it again. If you do not already have this bookmark, as long as you are a member of Simpler Trading, aka even if you're just a member of the free room currently, you have access to all the videos that live on this spreadsheet, and I'll post Twitch and YouTube as well. And so let me load it up really quickly. But over here, under this first column, that's my column, at least, right? Outside the date. Column B is all the videos that I've ever recorded in the past. And a lot of these are really great introduction videos, Sharon. So I've done a lot on different styles of option strategies, iron condors, different types of butterflies, the difference between vertical debit spreads and credit spreads, when you might manage a winner, right? All these kind of introduction videos. And of course, I do a whole bunch of videos too around indicators. But I tried to make it as educational as possible. So I, did little slides around them and everything like that. So certainly check out those videos. That is a great source. And it's not just me. Neil, for example, did like a Futures 101 session. And so there are a lot of great, like, kind of introduction beginner videos for trading that you can check out there. And if you are a member of the Small Account Mentorship, a good chunk of those videos also live in the Small Account Mentorship Learning Center. So take a look at that. And on that spreadsheet, I forgot to show you guys, but as long as you're signed into the Simpler website, if you click on the link for, like, basically the Broken Wing Butterflies video, if you click on the link for that, it should direct you exactly to where that video lives. So you don't have to go searching on the website for it. So bookmark that page if you haven't already. It's a good resource to have. And I don't personally have voodoo lines on my charts. The dotted line is the ATR trailing stop, and that is a free indicator on most charting platforms. And then Evelyn, I didn't miss your question. This will be the last thing I take a look at. Let's pull up ADI. So ADI here. Yeah, HC, absolutely. I think it's a good thing to have in your toolbox, right? Of educational material, certainly. So for ADI, you do have squeezes across the board, daily, weekly, and monthly squeeze printing. You can see that with the multi-squeeze indicator up here. You did have a recent true low off the 100-period simple, so good for that short-term run-up, certainly. Overall, though, when we take a step back, we're basically in consolidation. We've had trouble breaking above 200 this year. That kind of seems to be the range that we get close to and then stall at. At the same time, though, outside of this dip off of earnings, we've done a pretty good job of trying to maintain the 100. So similar situation, we're in a bit of chop. The trend itself is still a bit more leaning bullish. Momentum's reset. We have a choppy signal here. We have a nice squeeze building up. But the Bollinger Bands are flat. So we're in a bit of consolidation. Let's take a look at the weekly chart, see if that gives us a bit of clarity. So the weekly chart definitely has a squeeze. Consolidated signal in the compound breakout tool. Momentum's trying to build up. So that's a little bit more bullish. Bullish trend still. We are doing a good job of holding the 10-period simple on the weekly chart as support. but our Bollinger Bands aren't really flaring open. So I would say the biggest hurdle right now for ADI is that $200 price level. If we can actually manage to really get going and break above it, then I think these squeezes look great to fire to the upside and keep going. But otherwise, if you're trying to look for an entry here, I'd be looking to see how support levels hold, like that 10 period simple on the weekly, or how daily support holds, like the 100. And if those levels can hold support, if we're trying to build back in bullish sentiment off those levels, like we saw back here or back here, for example, then I'd look to play for the bounce higher. Of course, play into each level respectively. So if for example, we pull back into the 100, it holds, play up first into the 30. If the 30 breaks, you play into the 10. If the 10 period simple, you can break above that, then play up towards 200. You might even, call it a little shy of that, like 197. But if you see any sort of stalling around 197 to 200, if the Bollinger Bands remain flat, meaning they're not trying to flare open and make room for a move higher, take your win. You can always look to potentially re-enter the trade if it starts to actually break and prove that it's trying to move above 200. Otherwise, 200, right in that range, slightly shy of it, is the big level I would ultimately look to play into on bounces to the upside. And today, unless it makes a bullish divergent bar into the close, which it could, right off the Fed news maybe, unless it does that, I don't know if today would be my entry to jump into something. I'd wait at least until tomorrow. If tomorrow we're still holding 190, then I might consider doing it. Otherwise, if it stair steps down, the main level I'd be looking to try and jump back in on is the 100 period simple, because that's in line with weekly support too. And so that would make a pretty clean range to try and hold up on. And that is my time today, guys. So thank you so much for joining me. As always, may the trade be with you, my fellow Jedis. Please, once again, be mindful of how the Fed moves and reacts today with the market. Be careful of option premiums for short dated or same day expirations. And I look forward to talking with y'all next time. And as a reminder, guys, too, if you want a little bit more information about how I trade and the small account mentorship, or being mindful of risk, I am doing a free webinar later tonight with both John and Cody. So please feel free to join us, or if you can't join us live, as long as you're signed up for the webinar, you'll get the recording of it. And so, look forward to maybe seeing some of you guys there. Otherwise, I'll talk to y'all again next time. Bye, y'all. And then